Hi everyone, welcome to our channel where we help your real estate investments work harder for you. I'm Samantha and I'm joined by Billy Sue today, who's an investor sales representative on our Elevate team. Billy's all about putting his money to highest and best use. And this includes his investments, his stocks and real estate, and of course, his own home. And Billy is a firm believer in buying over renting. So in this video, we're gonna get Billy to tell us why. If you're not a homeowner yet, Billy's gonna share some tips on how you can get going on buying your first home quicker. So let's get started. Okay, Billy, so renting versus buying. Why are you such a strong believer in buying your own home?
Primarily because if you own your own home, you're paying your own mortgage. And if you're renting someone's home, you're paying somebody else's mortgage. But it really comes down to a person's situation. And the large one is obviously if you have a down payment, because there's a high barrier for entry. And the other one is if you know you want to be living in a specific spot for, I would say, at least 3 to 5 years. Because on the short term, if you were to buy something, there are costs involved that are not recouped or made back in the short term. For example, land transfer taxes, fees with your lawyers. So in the short term, it might not make sense. You know you're going to be moving again, so you might not want to pay those taxes.
The appreciation in Toronto is high, probably around like 5% plus per year. But if you're only buying it for 2 years and you're selling, land transfer taxes plus legal fees, it's probably around 3%. And then you have the agent fees as well, 5%. So, all those things added up might not make sense.
The market shows a little downturn in the short term. It might put you in a difficult spot. But for the long term, it is better to own if you know you're going to be living in a spot for at least 3 to 5 years. There's a lot of incentives the government offers you. Big one being no capital gains in your prime residence, as the middle class's most important investment is their own home. It will be probably the largest investment they make, and it'll be the best returning investment they make because it's the way the Canadian government has it structured is your largest investment. If you live in it, you will not be incurring any capital gains taxes on it, which is massive actually.
You're getting higher rates of appreciation versus your borrowing rate. So as long as you have the down payment and you can afford those monthly expenses, utilities, and your mortgage expenses, then it definitely makes sense to buy a home.
And you see that now in Toronto, even though there's a pandemic in the freehold market because interest rates are so low, the cost of housing is actually increasing really.
So I know you mentioned, home ownership has a high barrier of entry. It costs a lot to come up with that big down payment. Do you have any tips in terms of how someone can save up for that down payment?
If you've been saving some money in your RSPs, the government allows you to make a first-time home purchase using RSPs without incurring a penalty. It used to be $25,000, they increased it to $35,000. Another very common these days is, especially a first-time home buyer, a little bit of help from mom and dad. They can gift you a portion that you can use as your down payment. Another thing you can do, and there are projects that use the shared equity mortgage with Canada. So, for example, I know there were some condos. I think they were in Regent Park. At least one of them, I know for sure, had a shared equity mortgage. This program helped you pay down some of your mortgage.
Is that the government or is that like the condo project? Okay.
Yeah. Well, the government's working in conjunction with the condo project. So it's the condo developers or the builders who apply for this program and they share it with their buyers. Mm-hmm. So what happens is you effectively pay a smaller down payment or a smaller mortgage payment. However, if there's appreciation on your property after buying it, then it's also shared with the government.
So on top of that, there's also insured mortgages, right? Like if you get mortgage insurance, then you can take down your down payments as well.
If you go on a mortgage insurance, it has to be less than $1 million. You have to be a first-time home buyer. And then at that point, you can, I think the minimum is 5%.
Mm-hmm. It goes up depending on how much you borrow. Like if you borrow more than $500,000, I believe you need to put up a higher down payment.
Okay. Yeah, but insured mortgages allow you to come under that 20% threshold.
Yeah, which is significant.
Yeah. Mm-hmm. But you will those often require you to have a very high required to have a high income. But you can look into that and see if you qualify for something like that.
Mm-hmm. Yeah, and also you have to pay like a one-time premium.
However, your mortgage rates will be lower than than typical conventional mortgages because it's insured.
So, I mean, essentially, the government does encourage people to be home buyers, and that's why they're offering all these incentives like
Yes.
no capital gains tax, lower down payments, and chipping in and having shared ownership with you to purchase a house.
I know a lot of our investor clients used to make down payments as they leverage their own home or leverage existing properties through HELOCs, or whatever they refinanced their investments or their current homes at and take out that portion of equity and use it towards the down payment. So if you're looking to become an investor, that's usually typically what happens. You leverage your existing properties.
Yeah. So exactly. So that's how a lot of real estate investors grow their portfolio. They make money from their existing real estate and they go back to the bank to take out that difference and use that as a down payment to purchase additional properties. So we have the down payments, and the next thing is the monthly cost of living, the housing costs, like operating expenses, especially the large chunk is the mortgage. So do you have any tips here in terms of how they can lower these monthly expenses?
Sure. Toronto has become quite expensive, and modern day living in Toronto is very common for the family to live above grade and to rent out their basement unit. And their basement unit, say it's a one bedroom in the Toronto area, it can easily rent from anywhere between like $1,350, $1,400 all the way up to like $2,000. And if you're willing to rent out part of your basement, which a lot of people do, a lot of new home buyers are also seeking out properties that allow for a basement suite for this. That's really the big one. That's been the big change, I would say, in the last 20 years.
And that's essentially what you do as well, right?
Exactly. I do that as well.
What are you living like free right now with your tenants?
Am I living free right now? I'm in a very good position. Okay.
Yeah, definitely a basement suite can help you out with lowering your monthly expenses. There is one caveat though. If you rent out a bigger chunk of your house, then you might not qualify for the capital gains exemption if it's not actually considered your principal residence. So this is something to keep in mind, and something that you should go to your accountant to get more information about.
That's correct. So I think generally speaking, broadly speaking, but yes, again, you would want to confirm with the accountant. The majority of your home should be classified as a primary residence. A non-majority would be classified as a rental unit. In my primary residence, I live in a triplex. So I live in 1/3 of it, okay? And I rent out 2/3. So I'm only exempt from capital gains from 1/3 of the appreciation, where 2/3 I am still subject to capital gains. However, the trade-off for me is I'm living practically for free, basically. So that's the trade-off.
Yeah, for sure. I think it makes sense, right? You're still getting a little bit of the house where you don't have to pay capital gains tax, but the majority of it, you get a lot of income, and that snowballs as well. So if you don't need as much space, house hacking in your case definitely makes sense.
Yeah, my first residence was a duplex, and that one did qualify for total exemption. An idea to people who might not necessarily want to live in 1/3. If you live in a duplex or you classify half of it, then you're pretty much good to go.
We do have a video specifically about house hacking. So if you are interested in it, you can definitely head to the description below so you can check that video out afterwards. Like we said, house hacking makes sense. So it might make sense for someone to buy a house over a condo, but another barrier would be to qualify for a higher mortgage. So do you have any advice in terms of what they can do in order to qualify for a higher mortgage?
First of all, speak with a mortgage rep, either at a bank or an individual broker. But for example, if you were to, instead of buying a condo, if you were willing to go with the route of the house hacker, you could probably qualify for more than you think, because the banks would apply market rents to as part of your income to help you qualify, depending on the program. Then again, you have to speak with different banks, different reps. Some banks, they even apply above market rents as long as you can show proof that you're getting above market rents in your units. And this would help you qualify for a larger mortgage than your conventional sort of just income to borrowing ratios.
Go to different banks, because not all banks are the same. Some are more investor friendly, so they put a higher weight on your rental income, and some don't. So if you don't know who to go to, we have contacts as well. So feel free to touch base with us and we'll point you to the right people for you. So another thing for mortgages are they look at your debt servicing ratio. So another important thing to think about is to try to lower your other debt as well, right? So
Yes.
if you have credit card debt or like small car loans and stuff like that, offload those.
If you're working with a good mortgage rep, either at a bank or an individual one, someone that we would recommend, they would help you and they would advise you saying this deal is possible if you clean up, say you have some debt on your car or you owe some other outstanding. Like for me, buying my second home, I need to clear up some student loans. A good mortgage rep will say, I can help you make this deal happen.
Yeah.
If you eliminate this debt. So
yeah, that's pretty much it. Thank you so much, Billy, for taking the time to do this interview with us. If you have more questions for Billy, feel free to put those questions in the comments below, and I'll try to get Billy to answer those questions for you. Another way to contact us is through our website, and I'll link it up in the description below. And finally, if you enjoyed this video, please give us a thumbs up, share it, and subscribe to our channel. It means a lot to us. And with this, we'll keep producing these weekly real estate investing videos. And that's all for us for this week. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video.
Bye, everyone.